time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Little boom there. All right, we already are off to an interesting week. We spoke a lot about it yesterday. We're going to speak about it a lot more today and what we have to come thus far. Now, yesterday I said on the program, what I was really looking for was yesterday to be the bulk of the bearishness for the week. If we were going to get the most bearish action yesterday, I highlighted some areas you wanted to keep an eye on, specifically staying above that Thursday high. Worst case scenario, if we saw some more pressure, we'd get down to 670.23. And the ultimate worst case scenario will fall a little bit lower than that. We were strong yesterday overall. Much stronger, fared much better than I anticipated, and I'll be honest with you. Way better. Now, I mostly took bear positions yesterday throughout the day, and all of them made profit with the exception of one, so I actually had a pretty good day. Went for 5 for 6, I believe. As the bears had the most opportunity yesterday, again, in my opinion. With that being said. And as you can see, we had a lot of sharp declines multiple times in the day, especially into close there. But the bulls showed up pretty strongly into close with almost 10 million in volume in the last 5-minute candle. You want to zoom in a little bit more, look at the 1-minute candle here on the close yesterday. It's pretty substantial if I remember. Yeah, 5 million in the last 1-minute candle. Huge move at the end of the day to try to bid up the market going into close. Now, after hours, we had Powell speak, as I alluded to yesterday, and basically announced the end of quantitative tightening, which is going to affect the market pretty bigly, if that's a word. And we're kind of seeing maybe the early beginnings of that happening now. Now, as I said yesterday, I would prefer to see the market come down yesterday, which we gapped down and we moved up a little bit. So still overtly a bearish day, although it's a green daily candle. We did gap down, we did close higher, so still a green day, but it was obviously a retracement in price from that Friday high. But now this is going against what I was theorizing we were going to see this week. As I said yesterday, what I was theorizing this week is we'd see some level of bearishness yesterday. The most bearishness, I should say, should have been yesterday, followed by kind of like a choppy sideways-ish day, sideways to down between today and tomorrow, rallying to the end of the week. With the quantitative tightening ending, news coming through officially, right? This is something the market already knew of, but the fact that it has now been spoken into the ether, right? I think that's part of the reason why we're seeing some of this reaction here. So that could change the thesis on the week as a whole. Now, I will also remind you that doesn't change my thesis for the end of the year in general, where I am very bullish into the end of the year. The bearishness was just for the short-term cool down and retracement from last week's move, right? So we might just start moving here earlier. We're going to watch this open very closely, which I feel like I'm a broken record lately, but the opens have been pretty volatile recently. And yesterday was fairly volatile both ways as well. So we're going to watch this open pretty closely here today to kind of get an idea. And towards the end of the show today, I'll formulate, I guess, an updated opinion on where we're going here on the market. I will say that I'm noticing a lot of positioning towards the end of the week higher than we're currently sitting, which is good. It looks like the way things are sitting right now that the market should want to move up and close above Friday's high, last week's high, I should say, which was my original thesis in general, that we would close over Friday's high, at least in a perfect, most bullish scenario, just that we'd sweep a little bit lower between yesterday and Wednesday. So if we're just going to rally, we're just going to rally, and I'm not going to spit in the face of it. We can rock and roll all day. I'm not mad about it. But we're going to just take this with a grain of salt right now, just because we could have a little bit of excitement here. So we'll see how the open goes. If we get more downside today, in terms, when I say downside, I mean consolidation is a better word to use, not downside. But if we get more consolidation today, ideally, I don't want to get under, and again, maintaining the most bullish thesis here. The most bullish thesis here is that we still stay north of those two key LOIs that we saw yesterday that we closed over. So basically this spot right here, the 678.47 and 679.04. So that gives us about $3, $2 a cushion, depending on where we open, obviously, but about $2 at least of cushion into the open here to the downside with a little bit extra if you want to give an extension about 50 cents there to that lower LOI here. You also have the POC right up here, so that's where the most volume's traded, at least in this microcosm of time, right at about 680 even, 679.99. So good amount of support in the spot here. In a perfect world today, we don't rip and rally because I don't want to see that just yet. We had too hot of a move. I want this to cool before we go. So even though we're getting a gap up, even if we came down and closed the day up or came down and still hovered in this area, I feel pretty good about things still that we're heading into the end of the week, that we'd still get that close over Friday's high, which would maintain a very, very bullish Santa rally-esque outlook into the end of the year. But you got to understand that cool down here for the next day or two. It allows these short-term EMAs to catch up a bit. It allows new bears to come in, right, that are stupid, in my opinion. Will allow new bears to come in, will allow new bulls to reload, so it allows the market kind of to reset in either direction, right? So we kind of want that in this scenario. It adds more fuel to the fire to the upside here, ideally. Now, yesterday I did open two bearish positions that still have open right now. I do have a spread open for a 682, 683 spread, and I also have some runners on some put size 680 puts, which are going to be not good, which is why they're runners overnight. They're not going to be too great open here, so I might just cut those right away. Again, we'll see how open goes. So I'm just letting you guys know, might be a tiny bit of bias there just because I'm still hedged, at least more short term, at least in terms of from an options exposure. But to be very clear, those options are very short-term options too. This is not me shorting for the end of December or January or whatever. These are very short-term bearish exposure, just to kind of hedge my bets here, especially with the spread. If we do get some chop or sideways action there, that because it's a 682, 683, anything south of 682 is max profit for me in this scenario. So, you know, it'd still have a pretty good size position there where, depending on how today goes, we'll see. But I realized some of that yesterday, and I realized some of my 680, or most of my 680 put runners that are today are 0 DTEs. So we'll see how that goes, but no money, no love loss will be there either which way. All right. Hatchet, good morning, my friend Toby. What's up, my friend? And Eddie, dropping the urine in the chat. You know I got this for you, my friend. Alrighty. We got 5 minutes until the market opens. Yesterday, we're going to touch on volatility because yesterday we saw, again, what I said on the show. Basically, what I'm pinning as... Here, let's do the 5-minute chart a little bit better. Basically, I'm pinning as more than likely the high until the rest of the year, this 1818 open on the VIX. Now, I did say, especially through this week, my original thesis came true, that getting to this 1830, 1850 spot was still possible if it got like really volatile, 2030 at most. But if this is as bearish as we're getting, then this 1000% is going to be your volatility high. And you can expect volatility to slowly decline until the end of the year, at least at this point. Definitely for this week, especially if we don't get under those LOIs I was just talking about earlier on SPY. So basically, if we don't get south of 678.50, I would not anticipate a new high on VIX until the end of the week at all. VIX should come down. It should depress unless, again, there's some sort of outsized news event or something happens unexpected. Now, to be fair, we do have a lot of labor data coming through this week, as I alluded to yesterday, but in case you missed yesterday's stream, we have, I believe, ADP tomorrow. Just refreshing my memory here. Yep, we have ADP tomorrow, and I believe we have something on Thursday, jobless on Thursday. So we do have some labor data that week that could obviously give us a little bit of volatility, and we do a PCE on Friday along with Michigan sentiment and consumer credit. So we do have some important data points this week coming up, but as I alluded to yesterday, we have less of the randomness factor of people speaking. When people speak, there's some degree of insinuation we have, right? We have to understand that when Powell speaks or Trump speaks or any of these Fed speakers speak, they're saying words, and we have to infer from their words what their actions will be. The difference between that and hard data is a number. Because this ADP payroll is expected at X number, it's this number. From that, we can defer if we think it's bullish or bearish on the market, and that's the end of it, right? But if Powell says, today I had a tuna sandwich, someone out there might be like, oh man, that's bearish, better sell everything. And someone might say, that's the most bullish thing ever. Tuna sandwiches, buy futures calls on tuna. I don't know, right? Because we're betting on human emotions. We're trying to infer reason behind the words that are spoken, and consequently, those are the harder things to play with the market. Because we don't really have that this week, that gives me more certainty into the directionality of the market. Obviously, we have to watch for those pitfalls in terms of data. because they will affect the market, because they are hard data points that will give us an idea of economic outlook, but we don't have the randomness of just like, again, the tuna sandwich example. There's no random things for us to guess may happen, right? Which is great. Guys, we got about 2 minutes until the market opens. I'm going to do my little shtick for you guys. Do it twice a stream. If you haven't already, do me a quick favor, wherever you're watching, whether it's on YouTube, X, Instagram, Kick, or Twitch. Interact with the stream in your favorite way. I know a lot of you guys on YouTube especially like to talk in the chat, but do me a favor and drop a like as well wherever you are. Drop a comment, say hi. I like to talk to you guys throughout the day, as I do. Most of you guys, I interact with you on YouTube, but wherever you are, interact with the stream in your favorite way. Help support the channel. It costs absolutely nothing, and if you like the show, if you want more of the show, and you haven't already, do me a quick favor, pop over to the YouTube channel, hit that subscribe button. Once we hit 500 subscribers, this will be an everyday show, so if you enjoy the content, you want more, it's totally free. Hit that button, tell a friend, and I thank you for your support of the program. So it looks like we're getting a little bit of downside-y, a little slide here into the open, but we got about 50 seconds here until the market opens, so we'll keep an eye on this as we open. Like I said, I'd be cautious around this open and potentially some profit taking, but in general, as long as we're staying north of that 678.50, that 679 area, those two key LOIs, you should be good for the rest of the week. They're just today and tomorrow I'm still very cautious on, as I anticipate the market to kind of be somewhat of a chop. So that's for more of like a day trader perspective, of course, right? So if you're a day trader, you may want to act with a little air of caution, just in general. Anyway, market's about to open, so let's get into it.
It's about to open. It's time to start the day.
Alrighty, right now we've got 3 seconds till the market opens. We're breaking the 200 MA on the 1 minute into the open here, so that's going to be an interesting spot to see how we react right on the market opened, and we open right now, right around this 681, basically 682 level, we'll call it. On the open here, let's take a look at the Qs right now on the open, up about 0.38%. I'm not getting data. There we go. Up about 0.38%, and the Russell leading the way, up about 0.6%, opening right around this key LOI, 247.18, currently breaking it here. Something I spoke about yesterday, might have been in the Discord, not necessarily on stream, was that we were seeing IWM. Actually, I did talk about this. So on the market on close orders yesterday, we noticed a very big shift trend, or change, I should say, where SPY actually got a very negative market on close order. I believe it was almost negative $1 billion. But the positive inflow was actually on the NASDAQ and on the Mag 7 names. So that was indicating that we could see, at least in my opinion, this is just one part of the puzzle, right? We could see some profit taking come out of Mag 7 names or names in the Dow. As I like to call them, the 493, right? The SPY that isn't the Mag 7. We might see some profit taking come out of them today, tomorrow, which would support my thesis of getting some chop or sideways price action, or even a little bit of downside near term. While we see some bullishness, or at least not bearishness, come into the mag names. And you're seeing NVIDIA getting a nice bid here, even though the market is kind of moving down. So NVIDIA is actually getting a nice little pump here. Remember what I said yesterday about NVIDIA. As long as you're north of this area, you're actually looking really good now into the end of the year on NVIDIA. I knew it looked scary there for a minute, but as long as you don't close under 171.58, this is going to more than likely reverse, and this is a good start of the day for NVIDIA. Google right now at about 315. As I alluded to yesterday, I anticipate Google to do basically a similar price action to what we saw here back on the end of the month in October into the beginning of November, where you have some level of consolidation for about 2 weeks and then rip into the end of the year. So I think Google's going to try to find its kind of trying to get a little comfortable up here, and in this new price. The more bearish scenario would be for it to come down back at least to 285, but I think we've got a lot of this Gemini hype cooked into this now, and now it's going to consolidate before building a new base up here, a la NVIDIA doing this kind of price action over here on the weekly chart. So I think we're going to see a similar move in Google here, where it's not really going to go anywhere for a week or two. Ooh, NVIDIA's over that 183.30 spot. I'm sure you guys remember that level I give to you over and over and over. This is a very, 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 very important weekly level on NVIDIA. And it's looking good. We're clean over it right now. I don't think it's going to be a clean break right away. But let's watch this as an area of interest that we could potentially play today. Because like I said, if I want to be a bull today, if I want to play something today specifically, I probably want to lean towards the Mag 7 names. So what I'll look for here, if I'm going to open the long on NVIDIA, because I don't anticipate this to break and hold right away, see if we consolidate up here, or if we come down a bit and make like a, just like come to like 183, like come down under it just a tad, and then start to retrace. If we start to retrace after that, then I more than likely consider the long. So we're going to keep a high watch on NVIDIA for a potential day trade here. It is very early still, so it's probably going to be a little volatile, and those contracts are probably going to be a little expensive, but we're going to wait here. There could be an opportunity here, so we'll keep that on watch. Meanwhile, SPY is just kind of chopping around here. More than likely due to IWM coming down, still leading the pack in terms of percentage gain though, respecting that 200 MA. Qs are getting a big push. Okay, that means I'm probably going to close out those 680s, my runners from yesterday. I'm going to give it one more minute here. Like I said before we open, I did have some runner 680 puts on from close yesterday, and like depending on where we are here, and like I said before on the program, or before we open the market, I should say, depending how we react here at open, I'm either going to close them out and see what happens, or see if we can get a move to the downside again to that 679-ish spot. And I still have exposure from my spread. So either way, I've got some downside protection, sideways protection on. Qs are looking pretty good. Yeah, expect weakness out of the Russell today. I think, especially if it breaks this spot specifically, that's going to be a short-term short signal. Again, short-term, don't get too excited. On IWM specifically, breaking under that 200 MA right here in this LOI right here at 246.79. Backtesting, basically we'll call it 245 for simplicity. Backtesting this today wouldn't shock me. This was an old all-time high that was a hell of a resistance before breaking. So coming back down under that today wouldn't be the end of the world. We sat above it yesterday. So getting that test in from a weekly perspective would make a lot of sense. So if there was weakness to come into the market, it would be through IWM today, in my opinion. And you would more than likely find strength in your Mag 7 names today. Consequently, I would anticipate the SPY to mostly be choppy to sideways because you're going to have a diverged market, right? RSP, so that's going to give us our idea of how the breadth is performing, right? Currently moving to the downside. Ooh, I forgot to tell you guys. Later in the program, we're going to do a little segment on quantitative tightening because not everyone knows what that is. So we're going to talk about quantitative tightening and how it could affect the market, which I think would be important, a little educational piece. So we're going to do that probably around like 9:50, 10 o'clock when things cool off and things aren't as crazy hectic. All right, NVIDIA proved me wrong. We just broke and rallied right now, tapping our second LOI up here of 184.55. Currently up about $4.50. We might have gotten news or something. Let's see. NVIDIA asking for 800,000 cows for calendar 2026. Okay. It's probably this. A pop-up. You guys can't see that. GE Healthcare introduces advanced imaging solutions powered by NVIDIA. Okay. I don't think it's that. It's probably this. Oh, it is. It's the news with GE. Well, any sort of positive news with NVIDIA is more than likely is going to assist it, not to mention the fact that it's been getting kicked in the teeth down here, and we held two very key technical levels, this level down here, and then if I zoom out a little bit more, this LOI that lines up with a POC here. We closed above it yesterday, so getting some bullish overnight news as well. That's going to spark a nice little push here on NVIDIA, so it's still looking pretty solid, which is going to more than likely help fuel a SPY rally here. So I'm going to close out of my puts. So now I think what I'm saying here is more than likely going to happen. I wouldn't anticipate SPY to get north of 683 today. Could happen. It could be wrong. We'll call it 683.57 since I have this LOI up here. NVIDIA is very strong right now, and the market's been missing that NVIDIA love. So it's getting a nice hand to the upside here. I wouldn't get too overzealous throughout the day on a SPY move, mainly because, again, what I'm theorizing here is we go back to a diverged market on the day where IWM sees some weakness, at least down to this 245 spot, while the Qs get some bullishness. And that's part of what we saw yesterday on the market on close orders, that we were seeing a distinct separation where there is more bears, again, in terms of market on close orders, more selling, I should say, not bears, more selling on the SPY and more bulls on, or buying, right, on NASDAQ and specifically the Mag 7 names. So this should theoretically continue to the downside, and this should be stronger on the day. Consequently, SPY is probably going to sit in this range here or drift lower. Kind of depends on how heavy IWM gets. Like I said, I don't anticipate it to get heavier than 245. And it kind of depends on how much of this move NVIDIA can retain. You're probably going to get some level of a short squeeze here. And I don't mean short squeeze like we're going to $1,000, but I mean you're having bears exit out more than likely, especially after yesterday's candle. Plus a bullish catalyst, so people are coming back into loving NVIDIA after it's been hated on for a week. Like a week where it got really scary there. Obviously, it's been hated on now for about a month in terms of bearish action. So we'll keep an eye on NVIDIA. Obviously missed my long here, but we didn't meet my criteria to open the long, so we didn't take the position. That's okay. Google getting a nice push. You're seeing a lot of tech names get a bid right now. Well, let me check a few things here. Yeah, you're seeing a lot of tech names catch a bid right now. Even a lot of, like, it's interesting. So you're seeing, although IWM is going down right now, you're seeing some of the smaller to mid-cap tech names also catch a bid at the moment. Which, in that case, like, especially AI things, more than likely are going to go up with a rally. So that kind of helps buffer the losses on IWM because those larger tech names, I shouldn't say larger, those smaller AI names are going to move up off of the back of getting some tailwind from NVIDIA's push to the upside. So that does make a lot of logical sense that we would see that today. Okay. Looking pretty good. Let's check out Microsoft. Like I said yesterday, as long as Microsoft's holding 485, this is probably going to get a quick rally to 500 very soon. I'm a little hesitant on it, mainly because of its how the options trade on Microsoft. You can time this wrong and you can get kicked in the teeth pretty good. Let's look for next week and see what we're looking like in terms of price. Okay, spread's not awful, actually. Spread is only like 20 cents for next week's contracts on Microsoft. I'm going to keep an eye on this. I do like how price is sitting. I like our MACD curling up here on the daily. We have some risk to the downside, like I said, here potentially, where it's not really out of the woodwork yet. Out of the woods, not the woodwork. It's not out of the woods just yet, but if I wanted to be an early bull here, I could be. I think this may be one of those moves, and for those of you that are in our community know, I'd like to say I'd rather be late to the party than show up to the wrong house, right? I'd rather pick the stock has now had a confirmed bullish reversal and not make as much money than get in early and get absolutely wrecked. So I would rather still show up to the right house and be late to the party than knock on someone's door and get a shotgun to the face. That's the analogy, essentially. Meta, I'd still be very careful as a bull here. Apple doing its thing today, just kind of grinding up to the upside. Tesla, like I said yesterday, big spot here. You now kind of have like a triple top on the daily. This is a very, very, very big spot in between this range here. Between 430 and basically where we are. 430, this LOI here at 430, 331. Tight range. Volume is kind of falling up here. Now, to be fair, we had the holiday last week. Volume better yesterday. But you left 2 wicks up here. Right now, you're wicking it as well. Breaking this will be very bullish for Tesla, but it will not come easy. Not at all. Amazon looking like this is already forming a little bit of a doji look on the day here. So getting back down. Again, I'm looking at like 227, 225 if I want to go long on this in the short term into the end of the year. Something like that. And as my crystal ball has foretold, that move did not stick, and we're going back down because more than likely, without looking, NVIDIA's got to cool. It's not going to go forever. And IWM is doing exactly what I said it would. We are grinding to the downside here. Now, I don't necessarily, again, yesterday I said I didn't even want to be a bull, and I actually pretty sure I took a bear position live on the program. And I basically traded bear all day yesterday, actually. I was just shorting where I could, and I didn't want to be short, but that was the opportunity that was given to me. As there are times where you don't want to be picking up pennies in front of a bulldozer, you don't want to be picking up pennies in front of a bulldozer, where yesterday you have that kind of risk. Today you have that kind of risk being a bear, where you're picking up pennies in front of a bulldozer if you're not doing it fast enough, right? So you want to be very cautious if you are trading short today. I will reiterate, that's probably where, if anything at all, you're going to make money as a day trader today. Obviously, don't get me wrong, you're obviously going to make money on the long here. But in terms from a risk perspective, if I'm anticipating a choppier day on the market, or if I'm anticipating some level of retracement, which I am, then I'd rather position myself with my anticipations, which is to the downside. Now, I did close out my 680 puts, like I said, that swung overnight, which were, again, runners. But that's mainly because NVIDIA's been beaten down, and this thing could keep pushing here. So that kind of gives me an asymmetric risk. That's why you gotta give a candle like this, right? You just push up to the upside, and you can get completely decimated. But like I have open right now, I have a 683, 682 bear spread, where anything under 682, I'm max profit. Anything above 683, I'm at a max loss, theoretically. And if I'm theorizing a downside move in general, or sideways, this is the best way for me to play it at this point in time, where I can take advantage of sideways price action if it kind of floats in this range a little bit lower, where I'm more than likely will make money, and I don't take on as much risk as a directional put, at least in this environment. Let's take a look at our IV at the moment, and our IV right now, 0DT at the money IV, currently about 18%, rolling 52-week IV is about 16.7. So you're about a 1 to 2% higher on your IV right now. So things are a little bit expensive. Looking at IV percentile right now, we're at a 47% IV percentile, which indicates to us that the market has actually been more volatile 53% of the time throughout the last 52 weeks in comparison to today's price action. However, something to note that our HV percentile is at 69%, meaning the market has been more volatile 31% of the time in the last rolling 52 weeks, which means we're still in somewhat, so let me translate, we're in a somewhat more statistically higher volatility environment for the underlying, the SPY. However, options are not pricing in that volatility move. They're not pricing in a big move, which if we go back to the beginning of the show, just me patting myself on the back all day. We go back to the beginning of the show. I anticipate volatility to essentially decay in IV slowly throughout the week. And that's kind of what I think we're going to see on the VIX, that we're just going to slowly move down, again, barring any news, barring any BS. The trend that we should see is the VIX just slowly plodding down lower and lower, which theoretically does support a bull move. But again, taking the whole picture into account, especially with that HV still being what it is, that would support a narrative of getting a short-term bear move here or some level of chop consolidation on the market before getting another leg up, before getting a bigger move. Essentially what I'm trying to say, because what I love to do on this program, and those of you that watch very frequently, you guys know this, I don't like to say when things are bull market, bear market, because that is a foolish way to get stuck in our bias. The market changes every single day, and a good trader is able to look at the market and take the information we have and be willing to formulate educated decisions and opinions in real time using myriad of information, of course, right? With that being said, being able to shift and not say things are bearish, or being able to shift and not say things are bullish, is the best way to approach the market, in my opinion, because you can look at things from a risk perspective. From a risk perspective, this is not a good time as a day trader specifically, or a short-term trader, for me to put my money to expose the market, or in exposure to the market, mainly due to the fact that the risk is higher. If I'm trading a zero-day options, we might have quick volatile moves, which we've seen today. We already got a lot of range. However, if I'm anticipating a chop on the day, I'm going to get chopped up more than likely. If I'm not in, out, in, out, in, out, I don't have precise entries. So it's just going to make it theoretically harder for me to trade. So my risk goes up, right? In terms of if I'm going to make money, right? So the market shifts to a risk-off environment for me, because the environment that the market is sitting in today does not constitute one that I would probably make a lot of money on, and or could potentially lose more than I would theoretically make in terms of risk, right? Because we want to take low risk, high reward trades a lot of the time. When the market is risk on, the market is clearly a go signal, or clearly a downside signal, which we've talked about again on this program last week. You guys watched me for like 3 days in a row. I said golden setup, right? Everything's good to go. Be bull. Now's the time. Hit the gas. Today is one of those days where we go risk off. We look at the market and say, There is opportunity. Every day there's opportunity. But the risk here is not good, at least on the general market. We're looking at SPY right now. The risk to make money today, or the risk of me making money, it's iffy, right? Of course, if I scalp it, whatever, you could make money on these moves. But more than likely, you're going to have a harder time, you personally watching, more than likely if you're day trading, you're going to have a harder time making money today than you would have last week, right? Because of where we're sitting on the daily chart, because of everything I've spoken about, if you've been watching from the start, today gives me the inkling of a risk off day, which means I can still trade. Maybe I just lower my size, or I buy more time, or I'm a little bit more defensive than I would otherwise be on a normal day or a risk on day, right? So being able to shift those gears, I think, is extremely important because it gives you realistic expectations. Obviously, all of us as traders, as human beings, we look at the market and say, I want to make X dollars today, ha ha ha. And some days are not going to be that way. If you've put yourself into a bubble of I want to make 5% every single day, 1% every single day, $100 every single day, $1,000 every single day, you force yourself to work sometimes when you really shouldn't. Because there'll be days where you'll make your goal of $100 a day or whatever, and there'll be other days where you hit $500 and your goal is 100, right? They even themselves out. That's why I am always more of an advocate of looking for a monthly goal or a quarterly goal, something like that, because it's more attainable and doesn't put the daily pressure on yourself to perform in a certain way where it may not be, especially for your trading style, advantageous for you to perform in. That's my tirade for the day. Hopefully that helps. All right, it's 9:50, guys. Let's take a look at the sectors. We haven't looked at sectors together in a little while. Utilities pretty flat today. A lot of weakness here in energy. Ooh, look at energy getting hammered. Woo! Energy down almost 2%, 1.75%. Energy getting decimated. I'm assuming it's something with nuke energy stuff. Wow, look at that candle. Ay caramba. Energy, weak. Let me find out why, because I'm curious. I'm very curious. Let's see. Yeah, that's a big drop on the XLE. And conversely, you're seeing XLK get a big bump mainly from NVIDIA. So they're kind of washing, one hand washes the other here. Staples have been, it's been good, but it didn't start that way. It got gross there for a minute. XLRE, real estate's kind of flat. Materials down today, but it's after a nice little rally here, so some cool off there makes sense. Industrials kind of sideways. Healthcare, as I've been saying over and over, been probably since the beginning of November, I've been saying healthcare probably where you should look to make some opportunities. Right around here, I started saying healthcare, and now you're getting a nice push up on healthcare overall. Getting some retracement in the last 4 days, but nothing to cry about yet. And it looks like financials are going to try to take a turn here. I'd especially watch this in the upcoming weeks, especially now that QT is done. Let's see what the next Fed meeting looks like, and let's see how the XLF reacts to that. And discretionary and comm service is pretty flat. Let's go back to energy. I'm assuming it's going to be an oil corporation. Let's take a look at Exxon. Okay, Exxon's down a point, or yeah, a point and a half. Maybe Chevron or Conoco. Chevron? Okay, I'm guessing oil just got smacked. I haven't checked oil futures, but okay, yeah. So the top three names in the XLE getting hammered about 2% here. Oil, can I pull futures on here? We can just pull an ETF to get an idea. That's fine, right? That's an ETN that's not even, it's still listed. Very helpful, thank you. What is it? I don't trade oil. Pump? Nugget? No, that's gold. Someone help me in the chat. What's the the ETF for bullish oil? I'm going to know when I see it. I don't know. One of you will tell me. I know there's an ETF for bullish oil, and I know there's one for short, and I know it's something stupid and obvious, and I'm slipping my mind completely. I'll check it when someone reminds me. IWM continuing on its downside path for now. The Q's kind of consolidating at the high, so clear divergence here on IWM and the Q's today. Consequently, SPY is just kind of floating here sideways at the moment. Let's actually see how that spread is doing right now. Cool. Still nice and green. Very getting a nice bump here. Very up 10% on the day, almost 11%. VERI, Veritone. Nice little push there. Yeah, it's looking like the AI companies are getting a little bit of love today. Across the board. An important earning I'm looking out for is Path. I believe Path reports tomorrow, so that's something I'm interested in personally. We'll see how that works out. SPY making a new low a day here. Q's getting a little bit of weakness. IWM following suit, leading the path to the downside. I could try along here on NVIDIA if we get back down here. I don't want to, so I'm probably not going to, but we'll see. Nothing looking too appetizing at the moment. And because of how we're looking on the daily chart, I'm very apprehensive. I think tomorrow's going to be the day where I start striking pretty hard. Because again, my plan here in the perfect world was to get some level of sideways price action retracement here for the next like day or two. So that's my personal plan here on the market. And I kind of want to stick with that before looking more bullishly into the end of the year. Because I do think there's a chance that we just kind of don't do anything today. Anything major, I guess I should say. What are we looking at right now? $2? Yeah. I don't think, like worst case scenario, I really don't think we're breaking below these levels today. It would take a catalyst, in my opinion, to get under those levels today on SPY. If we get down there, I'd probably just close my spreads out just to, because they expire on Thursday. So I'd probably at that point be, I mean, I bought them for 46 cents. They'd probably be around 70 to 80 cents, and I'm happy with that. There's nothing to cry home about at that point. Yeah, I don't really see, it could happen, but I don't really see getting too much lower than that. Let me just double check we don't have any news or anything that came out. Fed Bowman testifying to the House in 5 minutes, and Trump has a cabinet meeting at 11:30. Okay, that could do something. If, you know, he decides to speak to the press or whatever, obviously. All right, guys, do you have any stocks you want me to take a peek at? Feel free to drop them in the chat. If not, I'm more than likely going to roll into that QT segment for you guys. Let me know what you think. Yeah, this is going to be, like, by my definition, this is a pretty risk-off day. If you do want to trade today, you probably have better luck picking individual stocks, and even those aren't like, I mean, we just flipped through the Mag 7. Unless you had the prime entry here on NVIDIA at the open. Not looking, like, too appealing one way or the other. Comparing our intraday charts to our daily charts. Nothing is, like, too desirable. Again, the other phrase I like to say, too bullish to be bullish, too bullish to be bearish, where things are looking pretty good, but reasonably it needs some level of a pullback or cool down. However, it's not enough for me to put my money where my mouth is, as in be a bear. You know what I mean? So unless I get like a prime entry, it's very... Toby says, what's your take on ASTS as a company? Not even making profit, but I've seen some comments about it that has so much long-term potential. Let's take a peek. Now, correct me if I'm wrong. This is the company that people who are obsessed with on Twitter, they put the red letter A in their name, the emoji. I'm pretty sure, right? That's this company. Pretty sure. Me formulating my opinion. Well, here, let's just read the summary in case those of you that don't know. So, AST Space Mobile is engaged in building a global cellular broadband network in space to operate directly with standard unified mobile devices based on its intellectual property and patent portfolio designed for both commercial and government applications. The company is engaged in designing and developing the constellation of Bluebird satellites and has planned space-based cellular broadband network distributed through a constellation of low Earth orbit satellites. Its space mobile service is being designed to provide a high-speed cellular broadband service to end users who are out of terrestrial cellular coverage using existing mobile devices. The company intends to continue testing capabilities of the BW3 test satellite, including further testing with cellular service providers and the government. The company has operations in India, Scotland, Spain, and Israel. Toby says, I hope not. I'm not following idiots. That's funny. Okay. I'm trying to take my time to be very clear. Okay. Some stocks are story stocks. And there's nothing wrong with investing in a story stock as long as you understand the risks of investing in a story stock. There are companies that I like that don't make any money yet, but I believe they have long-term potential and one day will be profitable. Those are your story stocks, right? Those are your stocks that are, in your opinion, undervalued for whatever reason. Obviously, they may or may not be making money, but they haven't turned a profit yet a lot of the time. These are the companies that you believe in could be a big company in the future. However, many story companies, story stocks, meet the fate of one of two ways. One, they go the, we'll call it the beyond route. They go the beyond route, consistently wrecking shareholder value, reverse splitting over and over, offering shares over and over to try to stay afloat because they have no other means of making money because their product sucks, or they can't make enough revenue to make ends meet still, and the only place they can raise cash from is by selling more stock to you, the stockholder, or at least to the market, which makes your original shares diluted. So you go the beyond route. That's path A. Path B is where you go the route of eventually becoming profitable and having that profit switch flip and some air of hope comes into the stock, and assuming that trend can continue, you can see some life come out of it. Now, specifically with this company, ASTS, they've got a large overhead. You're putting satellites in space and you're creating infrastructure, which actually I like quite a bit. If you think of a company like Amazon, right? Amazon did not reach the scale of opportunity it reached because of the fact that it's Amazon. It was a bookstore that started selling other products, whatever, right? But it reached its scale of opportunity because of the infrastructure, because of prime shipping, right? They were able to reach more people faster, and that's what gave them the edge over their competition. They built out a strong infrastructure network and essentially became eBay on steroids, where people can sell things now through a fast network with great customer service, right? That was their edge. That's what made Amazon successful. And now, because they're successful, they can go out and do all these other things. Now they're like a conglomerate corporation, theoretically, with robots and their own products, etc. I do see that opportunity for a company like this, because while there are other satellites in space and there are other companies that are doing space things and whatever, if a company is focusing on building infrastructure, it's going to be expensive. You could argue, if we go back to Amazon and let's look at, I don't know, back in the year 2000 or whatever, right? 1998 all the way until even here, 2008, we were still trading at like $5. Yeah, $4. People back then could look at Amazon stock back from 2003 when it was trading at $1.90, and now it's trading in 2008 at $5 and go, that's still expensive. It's overpriced. As you could look at ASTS in the same realm of saying back at $1.97, it might have gone to here in August of 2024 at like $20. People go, that's still really expensive. Now it went to here at 100, so that's still really expensive. But eventually, you could pull an Amazon-esque move right? If this is a company you love and you've done your research on whatever, because the infrastructure was built, that's the important piece, and could offer other opportunity. Amazon did not just continue selling books on good infrastructure. They sold other products, and then they built all this other stuff they do. They've got Prime Video, they bought MGM, they got all the other devices they sell and whatever, right? Hands in robotics and AI. So as you get bigger, you already have that infrastructure. Now that's your base for your business, essentially, where you can now do other things with the infrastructure or expand your business into other realms as well. So that offers a very interesting appeal to me. The question is, when do you invest in a company like this that has that potential to build infrastructure that is already marked up very harshly? And again, using that example from Amazon, when it was $1, $2, and it marked up to $5 or whatever, right? People were going, "Oh, it's still too expensive." Well, who's to say this doesn't go to 1,000, right? Or this doesn't go to 2,000 eventually? No one knows, right? This is one of those names where if you've done your homework, you've researched the name, and you like what the company's doing, I would consider being an investor in and not a trader in. It's very volatile. You'd have to find key points that you like to purchase the price at, whether it's $50, $40, $30, 60, whatever. You'd have to find areas that you're willing to have a certain amount of exposure to your portfolio if you like this name and you're not trading it. Trading, it's a different conversation. But looking at it from that point of view, the other risk you have to understand is that you will more than likely get diluted at some point. That doesn't mean it's the end of the world, but you have to understand that's a risk. Currently, this is a $20 billion company. So can it be worth more one day? Of course it could, right? It could 10x from here one day, right? Anything's really possible. But understand that you carry a strong risk of dilution, in my opinion. And you also carry the risk of additional headwinds if borrowing money becomes even harder. Right now, we've entered into a period of the Fed cutting rates, so it's easier to borrow money. Consequently, people are more willing to invest in general, whether they get it from private investors or people like you and me, or from banks. Wherever they're getting their money, the money flows more freely when rates are lower, right? If rates move up, companies like this will get smacked in the face, mainly due to the fact that they need a lot of money to build their business. So even 1% additional in interest could really hurt this company when we're talking millions and millions of dollars, billions of dollars, depending on how many satellites they're putting into space or what they're trying to work on right now. If they have to refinance their debt, whatever may happen, right? That's an additional risk. If you like this company, you'd also want to believe in the leadership quite a bit as well. So to put a nice bow on it, it's not for me personally. I don't hate it as long as you understand you're buying a story stock, as long as you understand what the goal of the company is, you agree with the scope of what the company is trying to achieve, and you're willing to be flexible with being diluted, I don't want to say hurt, but you're willing to be flexible as a shareholder of seeing some shorter term loss or gains and put that aside and look for the bigger picture, essentially. If you're looking for that $1,000 share, where when they flip profitable, make a ton of money or whatever, they use that infrastructure to do other parts of business that they could do, which is why I like that idea of a company building that infrastructure. You have to at least understand that risk that will be very volatile. I mean, even look at this in the short term, right? You were at the beginning of 2024, so about a year and a half ago, you were at all-time lows of $1.97. Since then, you 100x'd. You went to $102, right? Or technically 50, right? 50x, right? From that price in the span of however many months that is. That was October. So yeah, about a year and 7 months, right? 5 months, whatever it is. So in that span of time, your stock price went up 50 times. So you could still consider buying here if you wanted to. And obviously, stock price doesn't just appreciate for no reason. Sometimes it's a short squeeze, whatever. But a lot of the times when the stock price appreciates or depreciates, there's some sort of news or something that goes along with it that investors feel more confident to invest in it at $102.79 or up here in the $55 range, or over here in the $23.54 range, or on my last LOI since I looked at it. So it's not that it's a bad name by any means, but you just have to understand those risks that go along with trading a name like ASTS. What do you think, Toby? It was more of like a general statement on stocks like this. Now, I will say, looking at the daily chart, looks good for a reversal into the end of the year. It does look pretty solid. Like, I don't hate this from a trading standpoint. POC here, you got a lot of volume here, essentially, from 48 to basically here 54-ish. High or low here on the daily, you're above the 200. MACD flipping over. RSI is a little low for in terms of momentum, but you could have an early reversal here. I actually don't hate it. I might watch this for a short swing here into the end of the year. Getting back to 65-ish. I mean, you're up 3 points today, so today wouldn't be the day unless I'm chasing it because we're getting a good move here. But not awful. And names like this, I like towards the end of the year in terms of like small cap names that have extra volatility because, again, hedge fund managers, people who have a lot of money, they want to make up as much as they can for any losses throughout the year. So they play names like this. They play names that have a lot of hype or energy around them because they could probably make a quick buck off those kinds of names, and they're trying to pad their books for the end of the year. So I don't hate like heavy retail names that are sitting like this on the daily towards the end of the year. Don't hate that, at least from a trading perspective as well. Thanks for your take, as always. You're welcome, my friend. That's why I ask. You guys have questions or anything, drop them in the chat. We'll talk about it. All right, why don't we roll into let's look at the market because we've sat on that for a little bit, and then we'll roll into my little QT thing, and then I will cut you guys free from my grasp here. Market is sitting near the high a day. 683.67 was Friday's high. It could be in target here, in earshot. Is it 57 or 67? It is 67. Interesting. So I already have an LOI here at 683.57. Last week's high was 683.67. So that actually could be pretty significant. 683.67. That could be significant. So let's watch these two LOIs as like potentially the high a day. Eddie says random but Tesla breaking. I hope up. There you go. Ooh, good volume. See, that's what I was talking about. On that break of this spot here, so basically this 0.786 retracement and this LOI, you need a good volume break. Like that's pretty good. We get a back test here. That could be a nice play. Could just rally and push here. Had a nice push off that 427 spot. About $5. Actually, more than that. $7 now. So if we get a back test here, that may not be the worst thing in the world to see if we can rock along off that. Meanwhile, Nvidia is moving down now, so that's probably going to back test that 183.30. Again, not sure if I want to necessarily take that long. Microsoft grinded the upside here. Google just kind of chopping along, which is fine. It's kind of what I want for it. Meta just kind of chopping along. Apple pretty similar. Yeah, we'll watch Tesla here for a sec before we go into our quantitative tightening shtick. How are options today? 440s could be fun. Could be fun. Let's see. The 440s right now have a 43-cent delta. That's pretty good. Let's go back to Tesla. There we go. It could just go here, but for me to get good risk to reward, I'd want to at least backtest the 8 EMA, which is going to put us in line around the LOI there. So for these contracts, $5-ish bucks. North of 480, south of 531 on the 440s is what I'd be looking for. Eddie said, took a play off it thanks to some of your info. Hell yeah, man. Well, my favorite thing, especially to you guys that are in the Discord, is when I'm just telling you a bunch of information, and there are obviously, you guys trade your own things, you have your own indicators, whatever you use, but you use some of what I say to make your own money. It's really cool to me. Because my trading style is not going to be your trading style, and that goes for anyone anyway, right? We're never all going to do the exact same thing. But the way that I learned the best, how I learned how to trade the way I like to trade, is by picking and choosing a lot of stuff from a lot of people that I respect that are good at their job, right? I think it's the best way to learn because trading is very interesting in the sense that it's very stylistic. It's very you're gonna have your own style, right? Everyone's gonna trade differently. Everyone's gonna make their ends meet in a different way, and picking up what works for you based off of what other people do that is successful is nice to kind of formulate your own little Frankenstein of what works. All right, Tesla coming down. Now we left 2 wicks here, so you could leave another wick here, which would actually be pretty bullish. What's a 5 minute looking like? That's a look at that 5 minute chart. That's a crazy 5 minute chart. Yeah, so for me, 433.50. That's what I'm going to watch for the entry. And let me prepare this trade. I'm going to wait on the 440s. Again, my plan here is to scoop some up north of 480, south of 530 on the 440 calls, and ideally look for an entry around 433.50 on the underlying. So somewhere that fits all that criteria would be where I'm willing to take the trade. So we're just going to watch this very closely right now. All right, getting into my buy zone. A few more cents here. I'm going to pick up a few here around 525. All right, filled at a 527 average. I'm not full size yet because I think we're going to go a little bit lower. Because now we're in my shopping range, right? It's that 480 to 530 area. I might just sit with that price right now. If we just wick right up, it's possible. Here, I'll alert that just so people know. About half size on that. So we'll see if we go a little lower here, and then I'll go full size. Again, 433.50. So about a buck lower here is where that would be where I'd want to really put my stake in the ground. So that'd be where I'd expose the second half. So we're going to watch this very closely here. And again, to reiterate, for those contracts, which are right up here, looking at between 480 to 530, that range is where, so we're in my buy range right now. But I already have my position, so now that I have at least half exposure, I'm looking to get cheaper contracts if we tap basically like the lower end of that buy range here and get somewhere in the middle, obviously. So there's 2 ways you could play. You can just do whatever you want, obviously, but that's how I like to trade something like this, where you got a strong volatile move. You're coming down to back test key support and then move up. I'm liking these wicks here, so it looks like bulls are trying to step back in a little early here. There we go. Or not. That's fine too. Let me a little lower. I need 20 more cents. Voila. Perfect. Now we're tapping the LOI. I'm going to grab the rest here. All right. Got some at 490 and 495, 493, something like that. New average. Added. Second half. Full size now. What's my average? 503. So swept the area that was saying that's your low. Back tested the LOI here. Again, kind of knife catchy here off the downside move, but as long as we get a bounce here in the next like 2 or 3 minutes, it's still sitting pretty solid. And then I guess we'll talk about QT at some point. Hack just says Apple near all-time high. We'll check on that in a sec. Eddie says agreed and sort of hush-hush because people don't want to talk about losers and how they deal with it. Yeah, man. I mean, you know, I'm 90% sure you're in the Discord, Eddie, but I openly talk about when I have a loser. You know, it happens. And even when I'm on stream here with you guys, I'll talk about it when I have a bad trade. And but you know what a bad trade isn't? It's not just, oh, I'm just throwing money at a wall and hoping it works. It's, I had a plan. The plan just went against me. Like, sometimes that happens. Where people fail is where, if you fail to plan, you plan to fail, right? that's kind of what it is. And as you can see with Tesla here, I'm following my plan on the trade. I got in a little bit here, and then I said, around 433.50, I'll go a little bit more. I had a specific buy range on those contracts that I told you guys in real time. So now I'm trading my plan. Now we see what happens here. Really, I'd look for 432.50 to hold. Worst case scenario, we really should ideally hold this LOI here, but it could get a little bearish here on the 1 minute, mainly because of this was a pretty sharp move on the 5, so getting a little bit of a deeper retracement is possible. And these are also Friday contracts. So, but the cool thing about this trade specifically is I was waiting for this, and I mentioned it on earlier, how important this level is and how it would not be an easy break, but if and when it does break, will carry over more than likely. So if we do see this move hold today and push even higher, then this is one of those names or one of those kinds of trades that I want to swing throughout the week ideally. If I can get that momentum and hold it, these will more than likely go in the money by the end of the week because of how important of a level we're breaking on the daily chart. So again, talking about risk to reward, this is a good risk trade. It's not cheap or by any means, but the risk to reward here is still really solid, considering the daily chart and the intraday chart here, where it makes a lot of sense to be patient. So we'll see. Amazon SPY sitting near the high a day, getting a little double top here. Expect a rejection here soon, more than likely. Q's a bit of the same. IWM actually got a little bit of a rally there. Got back up to the 247, basically open spot. Now kind of, we'll call it a triple top. It's not really. It's like a quintuple top. But had having a hard time and probably won't get over this basically open price today. Again, to reiterate, expecting downside on IWM, more than likely getting to that 245 spot today. I guess I should drag Tesla up because we're going to watch that a little closer than usual. So I'll move you right all the way to the top. There's Tesla. All right. I guess we'll roll into the quantitative tightening thing, and then we'll get back into we'll check on Tesla afterwards. What I'll do for you guys, while I'm talking, in case something cool happens and Tesla just rips a rally, I'll probably set an alert to trim. I'll set a limit trim at 619. 619 or 620. And if that fills, what would that be? Maybe about 23% gain. So I'll set that while I'm talking about the quantitative tightening, and you guys can do whatever you want. Ideally, or what I'm looking for here, is if we get that reversal while I'm busy here. Theoretically, it should be a little lower, but theoretically, Tesla's price will be somewhere in this range near the highs, and obviously could still rally from there. It's just me taking some profit off while I'm not actively watching it at the moment. I also like that even though we're getting this bit of this red boy here, and although Tesla had some downside here, it's looking like it's going to try to get a little kicker here in a second. So looking good. Anyway, let's get into quantitative tightening. What should I put up on here? I guess we can just walk SPY. Toby says, I'm also interested on your take on Path as well. I'll put in a few words, Toby. I'm bullish. I own equity and both calls and leaps. That's my take. How's that? That is my take. Alrighty, let me go to my notes. Where are my notes? And guys, if you haven't, do me a quick favor, because I asked you twice a stream. If you haven't liked the stream or dropped a comment in the chat, either one, do me a favor and do so. So feel free to say hi in the chat. Appreciate the support. And drop a like on the stream, especially if you're over on YouTube. And if you haven't already, make sure you subscribe once we hit 500 subscribers. This will be an everyday show. So if you enjoyed the content, you stuck around all day today, why aren't you subscribed if you're not? Go ahead and hit that subscribe button. Thank you again for your support. Let me pull up my notes if I could find them, because I don't know where I put them. There we go. All right, so we're going to talk about quantitative tightening a bit. And I've got about 5 bullet points that we're going to talk about. Basically on how, when QT stops, how it's going to affect the market. Pull that up. And I'll record this in case you guys want to listen to it later. So we just heard the Fed is actually stopping quantitative tightening. And that is a big thing, and a lot of people don't even understand what quantitative tightening even is or how it could affect the market. And that's why I'm here today to explain what quantitative tightening is, how it will affect the market in 5 easy to understand bullet points to kind of make this as smooth as possible, because we got enough complicated things to deal with the stock market, and understanding things like quantitative tightening or easing can be a little complicated, especially if you're a novice. So we're going to talk about it right now, so that way you can feel more informed on what this even means. So quantitative tightening. So let's define what quantitative tightening is. It's essentially when the Federal Reserve shrinks its balance sheet by letting bonds roll off, or in other words, mature, without replacing them, or by actively selling them. So I guess in the most simplistic terms, you could say that QT, as I'll refer to it for the rest of the video, is the Fed pulling money out of the financial system. So they're taking money out of the market, theoretically, right? As a result, this will theoretically reduce liquidity. It pushes borrowing costs higher. Again, this is all in theory, in a bubble. And it acts as a form of monetary tightening alongside higher interest rates. So typically in the environment where we see interest rates go up, we typically have quantitative tightening. It's not always, obviously. Same thing with quantitative easing. But at least in this perspective, when we see QT, we typically see rate tightening as well. Now, when the Fed stops QT, because we just stopped QT, how does it actually affect the stock market? Which is, I'm sure, is why you're watching, what you want to know. And I have 5 bullet points to make it pretty simple. Your liquidity increases. We just talked about how QT can decrease liquidity. So instead of pulling that money out of the financial system, we're just not doing that anymore, right? As a result, it's going to be a direct tailwind for risk assets, essentially. So ending the QT is going to remove a major drain on liquidity. More liquidity in the system as a whole generally supports higher equity evaluations. So consequently, especially those story stocks, especially those stocks that haven't necessarily turned a profit yet, those stocks tend to benefit from no QT. There is lower pressure also on long-term interest rates. So we just talked about how QT can pair with tightening monetary policy. QT tends to push the long-term treasury yields higher. So if stopping QT does the opposite, that can theoretically boost stocks or equity in general, particularly those very high growth rate sensitive sectors I just alluded to. Again, your story stocks, the smaller companies, your IWM, right, Russell 2000 stocks, those are more than likely the ones that you see a positive effect from QT ending, right? Third bullet point is that it can improve financial conditions in general. Credit spreads may tighten, so that consequently makes borrowing a little bit easier, theoretically. And corporate financing confidence improves, which typically is a bullish signal for equities. If people feel more comfortable borrowing money, then there decreases the risk of companies going bankrupt, right? Consequently, equity prices they don't have a ceiling on them, so to speak, because there's lower risk of those story stocks getting hit as hard, theoretically, causing a more than likely bullish tailwind effect for stocks. Your fourth point is that Fed shifts, or should say potential Fed shift in sentiment, can be interpreted as a dovish action, right? So we've already seen interest rates cut recently, so ending QT theoretically could support that narrative even further. When QT ends, it typically signals that the Fed is more comfortable with the economic stability of the country as a whole, to some degree, and how inflation is trending. Theoretically, markets would typically price softer policy path in general, so we're typically pricing in the odds of more cutting or not raising rates at least, right? Which can boost momentum for the stock market in general. And lastly, inflow to equities. We should see inflow into equities as we see bonds start to stabilize. So if the treasury supply pressure starts to ease up a little bit, bond volatility theoretically will drop. So that comes off the back of economic stability increasing and people feeling more comfortable with corporate financing. As a result, there are more predictable yields as investor appetite shifts back towards stocks. Because during the time where we're in a period of we're really tightening down, we're raising rates. There's quantitative tightening, so money's leaving the market. You see a lot of bigger money go into bonds for safety. It's more secured, right? You're trading treasury bonds or whatever. You're getting your guaranteed 3, 4, 5, 6, 7, however much percent, and you're not looking at stocks as a means to make money. I mean, of course you could, but you shift your risk over this way. Now that quantitative tightening is ended, some of that risk can shift back towards quantitative, or not an easing necessarily, but back into riskier assets theoretically, because it's signaling that the Fed feels a bit better about its position in terms of a risk portfolio, or from a risk point of view. So essentially, that's what you need to know and understand about quantitative tightening, what it is, and how it can actually affect the market here in the near term, especially towards, again, those higher affected companies, your Russell 2000 companies, a lot of those companies that need to borrow more money in general that don't turn a profit yet, those are more than likely the companies that are going to be affected most of the ending of quantitative tightening. What do you think, gang? That sound good? Tesla breaking my heart. We're back to that 430.43 and that POC here. It went the other way. When I was talking, I wanted to go to the upside. It actually went down, so we'll fix that. It'll go back up in a little bit. SPY getting a death candle here. Do we get bad news? Something happened while I was talking? Tom dropping the high. What's up, Tom? Thanks for popping in. I'm pretty sure T-Burn's Tom, so hi, Tom. If it's not, I'm sorry. Oh, here we go. Putin yapped while I was talking, it looks like. European Sikh demands are not acceptable to Russia. If Europe wants to fight a war, we are ready now. God, can we stop with this crap? I'm so tired of this. Putin, we will take measures against tankers of countries which will help Ukraine. Tankers? Tankers, yeah, tankers. I hope Ukraine leaders will think about whether such practice is worthwhile. Putin may cut Ukraine off from sea if attacks continue. And on top of that, House GOP to offer short extension to ACA subsidiaries. I'm so tired. I'm ready for the year to be over. I need a vacation. I'm so tired. What did I say to you guys this morning? I said, we don't have any scheduled randomness, right? We don't have any people that are looking like they're going to talk. We just got Putin yammering. It's so boring. It's just so much. It's me. Right on. Hey, Tom. All right, well, let's see if we get down here like I said we would. I didn't really expect it to be off Putin drama, but here we are. All things considered, Tesla's holding up really well off that. SPY got gnarly there, and Tesla's at least showing some life even before the market. So I'm really liking that we broke this level with such force here. And although we kind of sat on it and rejected, let me just line up the time. 10:26. Let's just see. Yeah. That break to the downside here on Tesla more than likely was fueled by the market drama here. So theoretically, as that market drama resolves itself, we should get back over that level. Unless it develops into something even worse. How are my spreads doing off that little fall? We should be sitting pretty on those SPY spreads. Nice. Still nice and green. All right, guys. I think that's going to wrap it up for me. You kind of have the game plan for today. Honestly, I told you it'd be choppy and volatile. It has been just that. The SPY has been choppy and volatile. I said we're more than likely going to see 245 on IWM. We got 245.99, but you're probably coming down to here, 244.98. I said you do have a clean divergence between the Qs and IWM, and the Qs should remain somewhat bullish, which, again, despite the fall, has been fairly bullish. I said volatility should continue to decay and move to the downside, and despite even that little dramatic move on the market, VIX didn't even mark up. It marked up in the 5-minute candle 1.3%. Volatility should continue to decay, theoretically. Ooh, maybe I take the stab on NVIDIA. Had to hit the boy band jingle for that one. It's like an early reversal here on NVIDIA, but it's kind of hairy on the daily chart. Like, getting in now could work really nicely, but it's not going to be easy. Decisions. I think this is going to be another one of those scenarios where I'd rather be late to the party here. Yeah, I'm going to wait. I love NVIDIA short term over like 187. Between here and 187, it's a little sketchy. If you get over 187, then I can definitely play this for the end of the year. So I think I'm going to wait for that to trigger first, at least on the daily chart. For a day trade here, could potentially try to fire a day trade off here, but it's at that very, very key week level. It's just kind of messy. And to the upside here, but before 187, it's a little messy as well. So I don't really want to get in here at this point in time. Let's just see if I tell you guys anything else. Basically, everything I've said so far this morning seems to be, the market seems to be abiding by what I'm saying, which is nice. Now we just need Tesla to fire back to the upside, and we're pretty good. Sitting on its 200 MA on the 5-minute, as well as tested the POC and bounced off that. So as long as, even if the market catches some more bearishness here, which it is, I don't find this fall sustainable. And if it does get worst case scenario, like I said, as long as we're in this range here, that is still like a very, 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 very bullish outlook short term. This is actually, if you remember what I said yesterday, getting to like 675 was my most bullish out term yesterday. And I said there's maybe like a 10% chance that we sit somewhere up here. So we're actually in the higher percentile of like a good bullish trade. Now, again, I will reiterate, I still have an active bearish spread on right now because I do anticipate more sideways to down price action. But right around here is where I'm thinking we're pretty sticky on the day. If we come down here and tap, we're probably going to hold it. We don't really have much else happening today. Let me just verify. Outside of Trump having his cabinet meeting, we really don't have much else happening today. So I do anticipate kind of like, again, some downturn here and choppiness, but nothing too crazy. Well, like I said, it's a very, very risk-off market right now. We're getting a lot of volatility in, albeit a very choppy, tight range. You've got some direction here. I don't know if that's going to resolve itself right away. And even if your range to the downside here, maybe $2, and I don't know how quick you're going to get there, to be clear. And your range to the upside here, maybe a $1.50. So there really isn't a lot of money to be made either which way on at least SPY at this position here. And if I were looking on the daily chart and on the weekly chart, we're saying it's probably not going to do too much today and tomorrow. Then let's probably stick to our guns here and take it easy with SPY today. All right, guys, that's probably going to wrap it up for me today. Hope you guys enjoyed the stream. If you haven't already, drop a like on your way out. Thank you very much. And don't forget, I will be live again tomorrow at 9:15 a.m. for the last stream of the week. We'll talk about what I'm looking at for the market after today's price action. We'll look at what we're looking at into the end of the week and try to set you guys up for the end of the year, hopefully tomorrow. We'll have a good look on the market going into the end of the year. But that is my stomach grumbling, and the microphone probably didn't pick it up, but that means I'm very hungry, so it's time to go. Hope you guys had a great day. Some will tell you you will need an edge to trade. Well, I like to look at things from a different angle. That's always what you get right here on the Atomcash angle. Have a great rest of your day, guys. Remember, precision beats prediction every damn time. I will see you all tomorrow at 9:15 a.m.
The time has passed, and that's a wrap.